And let's connect with Kavinder Singh, MD and CEO at Mahindra Holidays and Resorts. It's been a healthy set of earnings. And thank you so much, Mr. Singh, for joining in because it's been a 3.5-fold rise in your profits. What has driven this and will this traction continue into the coming quarters?
If you look at our quarter four as well as full year performance, the increase in profits that you see has been driven largely by the fact that we are a membership based organization. We have 282,000 members. Members came in big numbers to holiday, as can be seen from our occupancy data. 85% for the quarter, 84% for the full year. We have added about 1,200 rooms during this last 2.5 years, despite increasing our total room count to about 4,940, roughly 5,000. We were able to maintain very high occupancies. Parallelly, we have done significant cost management during the pandemic and thereafter. That has led us to improve both the absolute number of the profit as well as the margins. And mind you, parallelly, we have seen significant improvement in the referrals, the members referring their friends, families to become members, also upgrades, and also their spends in our resorts. So this has really helped us to clock in extremely good numbers. In my view, this has been an exceptional quarter and an exceptional year, whether it is income, whether it is EBITDA, whether it is PBT. We are talking about the highest ever numbers that we have reported, both in quarter and the year.
Yes, Mr. Singh, that point is taken, and even the margin performance, as you pointed out, has come in very robust. Was there any one-off in the numbers, or do you think this 20% plus margin range is sustainable?
So margins are a function of the structurally the way we run the business. We have variabilized a lot of our costs, which were fixed earlier in nature. So the margin improvements that you are seeing compared to pre-pandemic, which have been significant, about 400, 500 basis points, and they are likely to continue. In fact, our aim would be to improve the margins further. Our aim would be to grow our member base faster. Our aim would be to add more rooms to our inventory, and that is what we are committed to. And you can see that the performance in the quarter and the year reflects that, and we are very positive looking forward as we look forward as in the future.
Okay, Mr. Singh, that point is taken. But despite the macroeconomic challenges created by the conflicts, etc., across the globe, Holiday Club Resorts, the European subsidiary, has managed to turn around. What led to this turnaround, and going forward, what kind of performance should we expect from the international arm?
Resorts is a subsidiary of ours, a material subsidiary based out of Finland, and they have operations in Sweden and Spain. You are right that despite the macroeconomic situation, as well as the fact which is of course caused by the Russia-Ukraine war, there are a few developments that happened this quarter which I would like to bring to your attention. Number one, Finland became a part of NATO. Number two, as far as the consumer sentiment is concerned, it has started to improve. The energy prices have come off from their peaks, even though inflation is high. Timeshare is something that Finnish people are buying because the mortgage, most of them buy on mortgage, and they find that buying a second home is difficult, but buying timeshare for a week or two is easier. So we have seen momentum in the timeshare sales. It's grown by 57% on a year-on-year basis. Our spa hotels have grown by 19%, and they delivered a 6.4 million euro EBITDA in quarter four. As well as full year, they delivered 5 million euro EBITDA. Britishers, Germans, Dutch, they all came during the skiing season in the Jan-Feb-March period in the Lapland area, which turned out to be the best season ever for Finland. So I think two things have happened. The structurally Finnish operations have become far more cost efficient, as well as the rebound in terms of travel within Finland, as well as from the international visitors will happen, has already started to happen from quarter four. So we remain quite optimistic about the Finnish operations going forward. But I must hasten to add that quarter two and quarter four in Finland are seasonal quarters, and that is where you see significant momentum. Quarter one is not a seasonal quarter, and quarter three is also not that much of a seasonal quarter. But generally speaking, the Finnish operations have turned around, and we look forward to the European operations with a lot of confidence into the future.
Okay, that sounds promising. And what is your total capex now for your resort additions? Because you were talking about how you've already added 1,200 rooms in the last 2.5 years. And what is your plan ahead in terms of resort additions?
Yeah, so if you look at, we have roughly reached now 5,000 rooms, and this has been a very, very strong momentum inventory additions. We added inventory in Vietnam, Cambodia, Maldives, Abu Dhabi, Nepal, as well as in Himachal and Andhra Pradesh and various other destinations. So the momentum in inventory additions in the year is reflected by 372 keys that we added. We have crossed the 100 resort mark already, and we are looking forward to future with confidence in terms of planning a capex of approximately 1,800 crores over the next 3 to 4 years, which will add about 1,600 odd rooms. We believe that we are in a position to generate this money from our internal accruals. We do not need debt to grow our business, and we are very confident that as we keep adding resorts, we will add more members at a brisker pace, and the story of success that has started already will continue.
Point is taken. So that was about the organic expansion plan, Mr. Singh. But what about inorganic expansion plans? Are you speaking with somebody for an acquisition, M&A, etc.?
We are generally looking at resorts that we can, lands basically where we can build. We are also expanding our existing resorts, and we are also looking to acquire. Just to give you a sense of what is the expansion going on currently, we have a resort in Kandaghat where we are putting in 200 crores and generating about 185 rooms, and that work started sometime in the last year, in the sense the last calendar year. And we have another project which actually started in April, which is in Ganpati Phule area, which will be another 250 crores investment. We are expanding our Puducherry resort, which is about 125 keys, which will be expanded to about 190 keys. We are also expanding our Goa Sonora resort by 44 keys. So when I look at the key number of keys which are in the pipeline, and also we are looking at a destination called Thio. So we are looking at about 750 keys which are already in motion. As far as acquisition is concerned, we are constantly on the lookout for acquisition candidates, and there are times when we go at an advanced stage, there are times when we pull out for various reasons. For us, location is extremely critical, the quality of resort is extremely critical. So that process is on, and you will hear from us as soon as something happens there. But our focus would be to build, expand, acquire, and if there is a good quality resort, lease it and manage it on our own.
Thank you so much, Mr. Singh, for joining in and giving us an outlook on your earnings as well as the expansion plans down the line. On that note, then, it's curtains down on